There is a hidden tax in Canada that nobody talks about. It is not written in any headline. It is not explained in any government letter. But right now, it is quietly taking money from thousands of Canadian seniors every single month. And the worst part? Most seniors are accidentally triggering it themselves without ever knowing it exists. By the end of this video, you will know exactly what this hidden tax is, how it works, and the one simple change that can protect hundreds of dollars in your pocket every single month. At Canada Pension Map, we break down complex government benefits into simple, clear information, using only official Government of Canada sources. This hidden tax is not new, but in July 2026, it is about to hit harder than ever before. Because July 29th is when GIS gets recalculated for every senior in Canada, and millions of seniors have no idea what is coming. This video is for informational purposes only and does not constitute financial or legal advice. Always consult Service Canada or a qualified financial advisor for your specific situation. Let me explain exactly how this hidden tax works. You worked hard your entire life. You saved money in your RRSP. You did everything right. The government told you, save now, withdraw later. So that is what you did. Now you are retired. You need money for a home repair or a medical bill, or simply to cover your living expenses. So you make a withdrawal from your RRSP, and that is where the hidden tax begins. Here is the reality that the government does not automatically explain to you. Every single dollar you withdraw from your RRSP is counted as income by Service Canada, not just for income tax purposes, but also for your GIS calculation. And here is the part that will stop most seniors cold. For every dollar of RRSP income above the exemption limit, your GIS is reduced by 50 cents. On top of the income tax you already paid on that same withdrawal, think about that for a moment. You pay income tax on your RRSP withdrawal, and then you lose 50 cents of GIS on top of that. Combined, you could be losing 70 cents or more on every single dollar you take out of your RRSP. The government calls this a benefit recalculation. Most seniors call it a shock. And here is what makes it so painful. You do not feel it right away. The RRSP withdrawal happens this year, but the GIS reduction hits you next July, when your previous year's income is assessed. By then, the money is already spent, and there is nothing you can do to get your GIS back until the following year. Most seniors do not connect these two things together, and that is exactly why this hidden tax keeps taking money, year after year, from the seniors who can least afford to lose it. But here is the good news. Once you understand how it works, you can stop it. Now, before I get to the most important part of this video, make sure you subscribe so you never miss a benefit update that could affect your retirement. Because what I am about to share next is the one thing most Canadian seniors wish they had known years ago. There is one account in Canada that is completely invisible to this hidden tax. It is called the Tax-Free Savings Account, the TFSA. Every dollar you withdraw from your TFSA, Service Canada cannot see it. It does not count as income. It does not reduce your GIS, not by a single cent, not ever. This is the single most important difference between a TFSA and an RRSP for low-income Canadian seniors, and almost nobody talks about it. Let me show you exactly what this means in real numbers. Meet David. He is 68 years old. He lives in Ontario. His monthly income is his CPP of $500 and his OAS of $743. Because his income is low, he also receives GIS of approximately $800 per month. His total monthly income is roughly $2,000. David needs $15,000 to replace his furnace this winter. He has two options. Option 1, he withdraws $15,000 from his RRSP. That $15,000 is counted as income on his 2025 tax return. Service Canada sees it. Starting July 29, 2026, David's GIS drops by 50 cents for every dollar of that RRSP income above the exemption. Over 12 months, David loses approximately $6,000 in GIS payments. on top of the income tax he already paid. His furnace cost him far more than $15,000. Option 2, he withdraws $15,000 from his TFSA instead. Service Canada sees nothing. His GIS stays exactly the same. His total income for GIS purposes does not change by a single dollar. David gets his new furnace and keeps every cent of his GIS. Same amount of money, completely different result. The only difference is which account he used. Here is what that means for you. If you have both a TFSA and an RRSP, always use your TFSA first, every single time, especially if you receive GIS or think you might qualify in the future. Now, here are your 3 steps to protect yourself starting today. The first step is to find out exactly how much GIS you are receiving right now. Log in to your My Service Canada account at canada.ca. Click on Old Age Security. You will see your current GIS amount clearly listed. Write it down. This is your baseline. After July 29th, log back in and compare. If your GIS has dropped, now you know why. If you do not have an account yet, you can also call Service Canada directly at 1-800-277-9914. That number again, 1-800-277-9914. Available Monday to Friday, 8:30 in the morning to 4:30 in the afternoon, your local time. The second step is to check whether you have a TFSA, and if not, open one immediately. Any Canadian aged 18 and older can open a TFSA at any bank. The total contribution room available to seniors who have never contributed since 2009 is now over $95,000. That is a significant amount of money that can grow and be withdrawn completely free of any effect on your GIS. If you have money sitting in an RRSP that you plan to use in retirement, speak with your bank about a strategy to move withdrawals toward your TFSA where possible. The third step is to never make a large RRSP withdrawal without checking your GIS impact first. Before you take any money out of your RRSP or your RRIF, call Service Canada or speak with a financial advisor. Ask one simple question: how will this withdrawal affect my GIS next July? The answer may completely change your decision. The maximum GIS for a single senior in 2026 is $1,109.85 per month. That is over $13,000 per year, completely tax-free. It is worth protecting every single cent of it. And one final fact: if you have never applied for GIS and believe you may qualify, Service Canada can backdate your payments by up to 11 months. You may already be owed money that is waiting for you. Let us go over the 3 things you must remember from today. There is a hidden tax that reduces your GIS by 50 cents for every dollar you withdraw from your RRSP. This is on top of the income tax you already paid. Combined, you can lose 70 cents or more on every dollar. This happens silently, 1 year after the withdrawal, when most seniors have already forgotten about it. Your TFSA is completely protected from this hidden tax. Every dollar withdrawn from a TFSA is invisible to Service Canada. It does not affect your GIS at all. If you have both accounts, always use your TFSA first. After July 29th, check your GIS amount at My Service Canada account on canada.ca. If it has dropped unexpectedly, now you know the reason, call Service Canada at 1-800-277-9914 for personal help. Do not leave this money on the table. You saved your whole life. You deserve to keep what you earned. And now, for the first time, you know exactly how to protect it. If this video opened your eyes today, please subscribe to Canada Pension Map. Every day, we find the information the government does not explain clearly, and we break it down so you always know where you stand. Tell me in the comments, did you know about the TFSA and GIS connection before watching this video? Or has your GIS ever dropped after an RRSP withdrawal and you never understood why? I personally read every comment, and I will answer as many as I can. And if you want to learn more, watch our next video on exactly how to calculate whether your RRSP withdrawal will reduce your GIS and by exactly how much. Thank you for watching Canada Pension Map. Take good care and protect every dollar of your retirement.